Hi, my name is James Rayburn, Private Client Advisor at Harrison Brook, and in today's video we're going to run through Q3 and look towards the end of the year. As everyone expected, the last 3 months have been incredibly volatile. The S&P, the index in the US, has seen 51 record highs this year already, which is a record in itself. We're really in a situation where investors don't really understand the climate. There's a lot of misinformation out there, there's a lot of fears. We've had concerns with the Delta variant, which have obviously sent some certain shocks and sell-offs across the US and also globally, as there were fears that potentially emerging markets weren't dealing with the virus as effectively as other countries in the West. That, combined with the amount of fiscal stimulus being pumped into the global economy on record scales, both in the States, in Europe and in the UK, has led to a more inflationary environment. And the biggest concern really has been whether this is transitory or it's here to stay. And in truth, no one really knows at this stage. Everyone has different predictions of what is happening. However, the Bank of England, the Federal Reserve, believe it is transitory. It's a result really of supply chain bottlenecks, especially in emerging markets areas and in supply industries. We've seen issues with semiconductors, which is causing prices to rocket, issues with supplies and everything else. And in Europe, you've got the issues with the HGV drivers and a lack of goods and services moving around the block. All of these things have pushed the prices up of raw materials. The manufacturing price index has increased, and this is getting pushed onto consumers. What this has resulted in is quite an uncertain climate, albeit one that is still favouring equities, just because there's no alternative at this stage. So the yields on bonds, the yields in government treasuries are incredibly low. There's a lot of cash sitting on the sidelines. Retail investors, meme investors, for example, with GameStop and everything else, are jumping into the markets, buying the dips. But the big concern remains, if this inflation does stick around, are we going to see a shift in investment strategy? Are we going to see a move towards fixed interest securities? And this is something that we're especially keeping an eye on, just because the whole market climate hasn't been traditional. It hasn't performed as global markets have done in the past few years, and that's purely because we're in a situation where no one has really seen all of these factors put in together. Record low yields on bonds, huge amounts of fiscal stimulus, and lots of retail investors' cash sitting on the sidelines ready to be invested. So really, for the short term, equities seem to be the place to be. Riskier assets have been rewarded. However, I would expect a shift towards more cyclical elements in the near future. Moving forward, all eyes are really on the tapering in the States, in Europe and the UK. What is going to happen with government support? Will these companies be able to stand up on their own 2 feet without all of the support? And also, the biggest concern is obviously inflation. Now, it's going up and up. Will it stay there? Is the big question. And what effect will that have on government yields? What effect will have that on bonds? And also the equity market. We've already seen in recent weeks some very large sell-offs, very recently in the Nasdaq especially. And these are all inflation-based concerns. So it's important to keep a keen eye on the markets. It's important to make sure that your asset allocation is correct and aligned with your attitude to risk at all times. And be proactive and dynamic when the time comes to eventually change. Thanks very much for watching. I hope you found this video informative and providing a bit of insight into what's happened in the markets during the last 3 months. And please do feel free to get in touch if you have any questions. Thank you very much.